Hey there, folks. Merry Christmas. Hope you're having a fantastic, wonderful, spectacular holiday. Coming at you live with this week's market wrap. I'll be back later in the weekend with stocks to watch for next week. But let's go ahead and take a look at what happened this week and see if we can't glean some kind of an idea of what might be coming up for the following week, heading into the end of the year. So, I was very pleased with the action that we had last week. However, I am a little bit concerned that we basically did a repeat of what we did heading into the Fed decision. So, last week we talked about the fact that I was still steadfast that we were looking to have a Santa Claus rally. And we defined the Santa Claus rally as the last week of December and heading into, through the first, at least through the first 2 or 3 days of the first week of January. That's typically your Santa Claus rally. And what I'm a little bit concerned about is that we may have robbed the Santa Claus rally of the rally, just like we did. We robbed the Fed of the Fed bounce because we ran up into it. So, looking at the NASDAQ, we basically ran 4 days right into this short-term trend line. Now, there are some other positives about the NASDAQ. I mean, we do have the 50-day, which is crossed above the 100-day. I like to see that. I think that's a good positive indicator. But what I am concerned about is we came up into this on lower volume. I expect that we will most likely have a lower volume week next week as well as we come into the end of the year. But we'll see. We'll see if we can break out over this trend line with some conviction and actually get that Santa Claus rally through the end of the year. We may have already gotten it. So that's one thing that I would be a little bit cautious about. One of the other things that I found interesting was the action in gold and the gold miners. So the gold, GDX, GDXJ, gold, they all look pretty darn good. And it is a sector that I think you want to pay attention to as we head into the end of the year. If the market rolls over, gold and gold miners, I mean, first of all, it's an extremely beat up sector. Secondly, if we get some, volatility and a fairly hard sell-off for whatever reason in the markets, then you could see, gold is a perceived safety trade. You could see some action in that sector, and I think it is worth mentioning and keeping an eye on as we head into next week. Now, oil was also a positive this week, right? Which is interesting because typically if oil is rising, that wouldn't be good for the market. But, oil in that whole sector has been so beat up that it's like the market's super happy that oil is rising in price. So we had a little bounce in oil. Look, Congress, lifted the export ban that's been in place for 40 years. That was a positive for oil. Well, really, what the big positive was the dollar was weak, right? When the dollar is weak, that typically is good for commodities, oil, gold. If the dollar strengthens, which was what everyone was concerned about with the Fed rate hike, that would strengthen the dollar, and that was, everybody was there were a lot of people that were heavy in that trade and on one side of the boat. And of course, because everybody was on that side of the boat, what did the dollar do? It decided to weaken. But that's something that you also want to keep close eye on. If the dollar starts to strengthen, that's not going to be good for commodities, and it most likely won't be good for earnings for big multinational companies. So keep that in mind. So there were some positive things out there, and that's really where I like to focus, is because I'm more of an optimist than a pessimist. But IBB, you know, we talked about the IBB last week, and it really has been holding up very well. And what we need to see it do is we need to see it break above 340 with real conviction. And if it can do that, I think it could potentially pull up the rest of the indexes, right? If IBB can strengthen and really go on a nice run, I think that that would be good for the overall markets. Now, it's been on lower volume that we are consolidating here, and we still do have the 50, which is below the 100. I would like to see a strong cross of the 50 above the 100. I think that would be a very positive thing. But for the most part, the action in the IBB has been pretty constructive. It's held up well. IWM, which has been a laggard really since June. I mean, we're in a pretty decent downtrend since June, short-term downtrend. But I found this a little interesting. You know, we had a little W pattern going on here, bounced off this short-term trend line. Kind of interesting. Really, what we need to see is we need to see the IWM crack over about the 120 area, really, with some serious conviction, and that would be really healthy for the markets. But for right now, it's kind of looking like what we might do is we might come back up somewhere into this 118 range, find some resistance, and maybe pull back again. And we could just continue that as we tighten up in this pattern. So, you know, the big red flags for me, so IWM and IBB somewhat positive. We had a couple of little positive things going on there. The fly in the ointment, we talked about the transportation sector, and it is a bit concerning. The transportation sector is concerning. Let's take a step back to the weekly. You know, we talk about dominant upward trend. That, I mean, we can come all the way back here into this 120, basically 130 area, and remain within this upward trend that we've been in since 2009. However, if we break below that upward trend with any kind of conviction, we could be looking at a trend reversal, which could get scary. IYT is one that is a bit concerning. Let's take a look at another one that really kind of sent a red flag to me. Yeah, let's see if we can find it here. Okay, retail. All right, look at this thing. It has been in a dominant upward trend since 2009, and we are right on this bad boy. Okay, if this breaks, now we do have the 50 above the 100-day. That's a nice thing to see. But if we break this upward trend with some real conviction, I'm afraid that things could get really ugly in the retail sector really, really quick. So I think it's a sector that you want to pay attention to moving forward. That's another potential red flag. Let's see what else we've got going on here that really kind of stood out to me. You know, we talked about T2107, T2108. Look, we had a nice, now remember, we talked about the fact that when you break below the 20, that is a time that, you look to cover up shorts, not the time that you really want to start piling on shorts. We had a nice little bounce off of the 20, but now we're coming up into this little resistance area. We could see a little pull back to retest that 20. We had a bounce in the T2108. Same thing. When we get below 20, that's an area of, you maybe want to look to cover up some shorts. And we had a nice little bounce. But that doesn't mean we can't come back down now and retest that area. So something to be cognizant of. Volatility has pulled back, right? And which is expected as we climb in the markets. You're going to see volatility. People get complacent once again. If we roll over, look for volatility to spike. Keep an eye on TVIX. Keep an eye on UVXY. Let's take a look at industrials. I'm going to back out onto the weekly here. You know, what's concerning is that we could be looking at this rounding out, topping out pattern is I guess, you know, kind of what I'm looking at. And it is a bit concerning. You know, if we take out, again, if we take out this long-term trend line, things could get ugly quick. What was the other one? SMH. Let's take a look at SMH. The semis, which was, you know, a leading sector for us for quite a while. Let's go to the semis. SMH. There we are. Now, we're a ways away on the semiconductors from being in danger of taking out the long-term trend line. But let's go to the daily. You know, we're really just kind of flirting with this 200-day moving average. We are consolidating a bit if it takes out this shorter-term trend line. And one of the things that was concerning to me is what I'm looking at down here. It does appear to me is that maybe we got some distribution going on, right? And I mean, we did have a little bounce in the SMH, but it was on really light volume. It's a sector that is not looking all that great to me. It is nice to see that we have the 50 above the 100-day. Like to see it stay that way. If it breaks this little trend line, maybe we come down and test 51.60, somewhere in that area. But SMH is looking okay. The one sector that does look fairly decent is the social, right? I mean, we've got a break over the 50 has broken over the 100. We've been consolidating right below the $20 holla, right around there. Need to take that out with conviction, but social actually looks pretty decent. Let's see what else we've got going on. Let's look at the S&P 500. So looks a lot like the NASDAQ, right? I mean, we pulled back and we're coming back up into resistance, heading into, you know, supposedly the Santa Claus rally week. And maybe we've already taken that Santa Claus rally. So, you know, over the next few weeks, I think we're going to have some pretty interesting stuff going on. Retail sales is a big concern for me. You know, if that breaks down, that would be pretty concerning to me. Let's see what else we got. Oh, TAN, we talked about TAN. You know, the solar sector actually had a nice little move, but it is struggling a little bit. It's got this gap down here to fill, right? I wouldn't be surprised if we came back down and filled that gap. I mean, we had some really nice bounces and some overdone, beaten down sectors. You know, like FCX had a nice bounce. What else? I mean, some of the oil names had really nice bounces. What was the other one? AA, Alcoa had a really nice bounce. I mean, a lot of the material names had a nice bounce, but the question is, can that continue into the end of the year? You know, if you see the dollar strengthen, that may not be good for, you know, the FCXs and AA. And it's something I think you want to keep an eye on. So listen, basically what I'm saying, just to break it all down and sum it up, is we're coming up into what is supposed to be the week of the Santa Claus rally. Unfortunately, we had a run into Santa Claus rally week, and I'm afraid that we may have taken some of the thunder away from the potential Santa Claus rally. So just be really careful. it's a light volume week. No one says you have to trade, right? At any point, you can just, go enjoy your vacation or your family, hang out, do nothing. And let's see, how we close out the year. I will be trading myself, but, it could be a very uneventful week next week. So that's where I'm at. We'll see what happens next week. Enjoy your holiday. Enjoy the rest of your weekend. I'll be back later with a list of stocks to watch, and I'll see you then.